The financial statements of a business typically include the profit and loss or the income statement, the balance sheet, and the statement of cash flow. Often there's a fourth that we call the statement of equity. We're going to focus primarily on the first one, the statement of profit and loss, or the income statement. In looking at the income statement for the business plan, you should take a look at financial projections. In other words, how do you expect the business to perform over the next 5 years? 5-year period is typical. You will look at the first 2 years in quarters. In other words, how does the business perform every 3 months? And then the final 3 years, year 3, 4, and 5, as 12-month periods. When you look at an income statement or a profit and loss, you'll look at 3 sections. Number 1, revenue. How much money does the business take in from sales? And sales are usually measured as price per unit times quantity or number of units. Cost of goods sold, which is measured as cost per unit times the number of units. You want to know the cost of goods sold to figure out the gross margin. In other words, how much profit or loss are you achieving on the sale of each individual unit. The third section of the profit and loss is operating expenses. Operating expenses are those expenses not directly attributable to the actual cost of goods sold. A lot of times there are overhead expenses such as your rent, utilities, etc., etc.